Tesla's warning to the White House. How the trade war could crash the electric vehicle industry. Tesla has just issued a major warning to the United States government, and it could change the future of electric vehicles forever. In a direct letter to the White House, Tesla has sounded the alarm about President Trump's ongoing trade war. The company is warning that retaliatory tariffs from China and other nations could cripple production costs, making it even harder for American automakers to compete globally. Could these trade tensions destroy the American electric vehicle industry? Will Tesla's warning be enough to force a policy shift, or are we looking at another financial disaster? Stay with us as we break down the real impact of the trade war on Tesla, global supply chains, and your investments. On March 14, 2025, Tesla formally alerted the United States Trade Representative's office about the serious economic risks of Trump's aggressive tariff policies. The company acknowledged the need for fair trade, but highlighted the disproportionate impact these new policies will have on United States exporters, particularly in the automotive sector. Tesla's message is clear. If these trade tensions escalate, it could significantly increase production costs, disrupt supply chains, and trigger massive price hikes for electric vehicles. Why is Tesla sounding the alarm now? Here's what is happening. President Trump's trade war policies have introduced steep tariffs on key Chinese imports. This includes batteries, raw materials, and semiconductor components, all essential parts of Tesla's vehicle production. In response, China is now considering imposing its own retaliatory tariffs on United States automakers exporting cars to Chinese consumers. This is a serious problem for Tesla, because China is the largest electric vehicle market in the world. Tesla sells nearly 30% of its vehicles in China. And if tariffs increase the cost of American-made Teslas, Chinese consumers could turn to local competitors like BYD and NIO. Market reaction. How Tesla stocks and the electric vehicle industry are responding. The market immediately reacted to the news of Tesla's warning. Tesla's stock dipped by 2.8% in pre-market trading as investors began pricing in potential profit losses. Other electric vehicle stocks followed, with Rivian and Lucid Motors falling over 4%, signaling wider concerns about the American electric vehicle market's future. Technology stocks with electric vehicle exposure, including Nvidia, Qualcomm, and Apple, also faced minor losses, reflecting investor concerns over supply chain disruptions. The bigger picture, what this means for American automakers. Tesla is not the only company affected by these trade tensions. The entire American auto industry relies heavily on Chinese-made materials to produce electric vehicles, and Trump's tariffs have now made those materials more expensive than ever. General Motors is now reassessing its battery production strategy, fearing that rising costs could erode profitability on its electric vehicle models. Ford's electric vehicle division could also face steep supply chain disruptions, further delaying production of its electric trucks and sport utility vehicles. Foreign automakers like Toyota, Volkswagen, and Honda, which have American-based factories, are reevaluating their North American expansion plans due to increasing trade uncertainty. Even non-electric vehicle manufacturers, including Stellantis, have raised concerns that increased material costs could spill over into the gas-powered car industry, further raising vehicle prices. If trade tensions do not de-escalate, we could be looking at a sharp increase in car prices across the entire industry. China's possible retaliation, a major threat to Tesla's global market. China has not yet announced its response, but experts warn that retaliatory tariffs on American vehicles are highly likely. In 2018, China increased tariffs on United States auto exports during a previous trade dispute, which led to a 25% drop in United States auto sales in China. If China repeats that strategy, Tesla's largest international market could collapse overnight, forcing the company to shift production to avoid the tariffs. This could mean Tesla may reduce exports from its United States factories and shift more production to Gigafactory Shanghai or its upcoming Mexico facility. If China imposes new tariffs, Tesla may increase prices on vehicles sold in China, making them less competitive against local brands like BYD. The White House could be pressured to negotiate a trade deal, but that might take months, or even years, leaving Tesla in a high-risk financial position. How will this impact Tesla owners and consumers? If tariffs remain in place, it will likely lead to higher electric vehicle prices across the board. Battery prices will rise, affecting the overall cost of electric vehicles. Tesla could pass these costs to consumers, increasing the price of Model I and Model 3 vehicles. Gas-powered vehicles might also get more expensive, as auto manufacturers adjust pricing due to higher material costs. Resale values of Teslas may decline if trade tensions lead to reduced demand in international markets. Consumers hoping for cheaper electric vehicles in 2025 may have to rethink their purchasing timelines. Could a trade deal save Tesla? Tesla is now urging the White House to negotiate a new trade deal that allows for lower tariffs on essential electric vehicle components. Some possible resolutions include a temporary exemption for automakers, reducing tariffs on battery materials and semiconductor chips, a mutual agreement with China, where both sides reduce tariffs to protect auto industry trade relations, more production shifts to Mexico or Europe, reducing Tesla's dependence on China for exports. If Tesla's warning goes ignored, we may see significant slowdowns in the United States electric vehicle adoption, as automakers struggle to maintain profitability. What happens next? Will Tesla survive the trade war? The coming weeks will be critical for Tesla, the electric vehicle industry, and global trade. If Trump continues his aggressive trade war, Tesla's global expansion plans could be severely disrupted. If China imposes counter tariffs, Tesla's revenue from Asia could take a major hit. If Tesla relocates more production overseas, it could reduce reliance on United States manufacturing, but hurt American jobs. For investors, the next Tesla earnings report will be crucial in assessing the company's long-term trade strategy. Final thoughts. Will the trade war crush Tesla? Tesla has built its reputation as an innovative leader in the electric vehicle space. But now, the company is facing one of its biggest challenges yet. Will Tesla survive this trade war and come out stronger? Or are these tariffs going to stifle innovation and drive up electric vehicle prices for years to come? What do you think? Will Trump's trade policies help or hurt the auto industry? Let us know in the comments below. Do not forget to like, share, and subscribe for more updates on Tesla, global trade policies, and the future of electric vehicles. Thanks for watching. Stay informed, stay ahead, and stay ready for what's next.